Alright, so we're back on our chart here in our MetaTrader 4 platform. We've got the Australian dollar, Canadian dollar currency pair pulled up on the screen. We're looking at the 1 day or the daily bar chart. So what we're going to do here is we're going to add an indicator to the chart. We're going to add the Rsi indicator to the chart. So first what you want to do is you can come up to here. You can either do it in the navigator. You can go to indicators, but you can also do it another way. Let's say we hide the navigator, and we're going to click Insert, Indicators, and we're going to scroll down to Oscillators, Relative Strength Index. Click it, and it's going to bring up some settings. We're going to keep them at the default for now. What you'll see is it populates on the screen down here, the Relative Strength Index. So you might not know what this is initially, but I'm going to explain it. So what the Relative Strength Index is going to do, the RSI is going to show you levels of extreme movement. Now essentially, I won't get into the math behind what creates the RSI or what calculates the RSI. You can do that online. It's super quick to find it. Now what you're going to see is that this is going to print extreme levels in the market. So what you'll see is that we've got two dotted lines here. Now if we double click on the Relative Strength Index, pull back up the settings, you can see that we've got the parameters here. Now we've also got the levels, and you can see that there's a level 30 and a level 70. Now what that's going to show right here on the right, you'll see the 70 and the 30. These are our extremity level points. So by default it's going to be 70 and 30. You can see right here that we've crossed below the 30 level, and that's showing that the price is at a severe oversold level. Now if it were to cross above here, we would say that price is severely overbought. So we can grab our crosshair here, and you'll see we got a pretty good signal here that price was extremely oversold. So when we got to this level on the chart, you'll see that we had a nice reversal from that point. Now it's not always going to be so easy, it's not going to be so perfect, but this is a great indicator for showing points on the chart that price has crossed into an extreme level. Now we can also toggle this. If we go back into our settings, go to parameters, we're currently looking at the 14 period, which means we're looking back 14 bars to make our calculation. Now if let's change it to 7, for example, cut that in half, and let's click OK. What you'll see is we get a lot more signals of overbought and oversold. Right here, you can see we got an indication of an overbought level. So we could have placed a trade in the opposite direction, or a short position. So you'll see that it presented a nice opportunity to sell off and make a profit on the way down. Now on the other hand, like I said earlier, we got a signal here in this general area to potentially look for a go long standpoint. Why is that? Because we crossed extreme levels on the oversold level. So that's the RSI. It's a pretty useful tool. I use it in my own trading. Extremely useful for finding points on the chart where price has reached an extreme stretch. Another one that we're going to show you, another indicator, let's get rid of this by right-clicking and clicking Delete, is the Bollinger Bands. Similarly, we're going to find extreme levels with this indicator as well. You can go to Bollinger Bands here under Trend Bollinger Bands, and we're going to again use the default settings. Now what you'll see is it creates these three lines. Now what this is going to show is the Bollinger Bands. If we go back to the settings really quick, parameters, we're looking 20 bars back to create a channel. Now deviations, what this indicator is going to do is it's going to look back in the last 20 bars, and it's going to find the point where price is mostly trading in. What you'll see is then we have two standard deviations from the mean of how much the price has moved. So this is our mean. This is a 20 period moving average because we're using the 20 period. And if we close this, you'll see that price for the most part stays inside of these two Bollinger Bands, the upper and lower Bollinger Band. Now when it does indeed stretch outside of the Bollinger Band, it is a potential signal that price has stretched outside of its comfort zone and is ready to reverse. In this case, as you can see, very nicely reversed back down all the way to the lower Bollinger Band. You can see we clicked and dragged with the crosshair, and it was a total of 2,876 points, or 287 pips approximately. So with that said, this is the Bollinger Bands. They don't always work perfectly, but they are a great way to look for overstretched price, just like the RSI. Now, the next one we're going to look at, let's delete the Bollinger Bands. We're going to look at, and I have not even looked at the chart to find this, I just think it's going to work out nicely. This is cool. So what you'll see is I can go right here. I don't even have to open an indicator for this one. I can go to this Draw Fibonacci Retracement. Click that, and you'll see my cursor is lit up with something. And what we can do, let's see if we can find a opportunity to do this. So what we're going to do is we're going to go from the high point of this move here all the way down to this low point. And what you'll see, let's make this a little bit easier to see. Right click Fibonacci properties, and we're going to change the levels to, let's make them black. Okay, so what you'll see is that we had this move to the downside. Then we retraced back up. Now what you'll see nicely is that these Fibonacci retracement lines are going to look at points where the market is likely to pull back to before continuing in the direction of the original move. So we had this nice stretch to the downside. I'll demonstrate with a trend line. Now we can clean this trend line up. Right click the trend line. Let's say, let's change it from array not to array. We'll change it to black, and we'll make it a little bit thicker. So we had this move to the downside followed by a retracement off of the lows. Now if you see, we moved right to the 50% retracement level. You can see it over here, the 50% retracement level. A lot of times price after a move will retrace or correct back a certain portion of the original move before continuing to the downside. So this was a very nice continuation Fibonacci retracement example. So now we can just delete all of this. So that was the Fibonacci retracement tool. Fibonacci is a very interesting thing. It is essentially a idea that is commonplace in nature. I highly recommend you to look it up online. It's very interesting. But the Fibonacci lines are essentially trying to look for levels of potential reversals. And so that is kind of a cool tool. Maybe in later course we'll go more into detail about Fibonacci, but as you can see, it's very interesting how these levels tend to repeat themselves, and there is possibly a profit potential there. Okay, so with that said, that is essentially your introduction to indicators and applying them on your chart. There's more here you can play around with, and you can do some research online to find out about what more of these are. You've got the MACD, momentum indicators, all sorts of different tools that will help you take a look at the chart and be told something about what's happening.